Ladies and gentlemen, welcome. Welcome, and also to the online participants. We don't see them, but they are here. Hello? Hello? We're starting. Thank you. Thank you very much. My name is Francesco Rampa. I head the Sustainable Food Systems team at the European Center for Development Policy Management, and it's a true pleasure to have organized this meeting together with AUDA-NEPAD, the African Union Development Agency, and Academia 2063. We will hear from them immediately. In fact, we are hosted by the African Union Development Agency. Madame Esteri Fotabong is the Director for Food Agriculture there, and has always been at the center of all things related to food and agriculture in Africa. It's a pleasure. Please, Madame Esteri, and then I will explain the rest of the day how we go about the agenda. Thanks a lot for coming. Madame Esteri Fotabong, you have the floor.
Good afternoon, and thank all of you for being here. It's been a long, 10 days now. So you can feel, and we all getting a bit tired. But your presence here is a clear indication of the importance of the subject that we are going to discuss today, on leveraging investments and financing mechanisms for national food systems and climate coordinated plans, with a focus on African smallholder farmers. So let me just start by recognizing everyone that's here. I'm not sure whether the minister from Kenya is here. We were expecting him. Maybe he's still on his way. I can see Ambassador Stefan Ugati here. Thank you for being here. I can see Mr. Maximo Torere here. Thank you. I can see, Mrs. Petenel Bwaga here. Thank you so much for being here. And of course, Stephen, the head of the CEO of the East Africa Farmer Organization. Stephen Mochiri is here. Mrs. Reshman Shah, thank you for being here. And Mr. Christopher Hamel. Yeah, I got it right, thank you. Of course, the COP28 food system lead, George. I've not seen George, I think he's still on his way. And Mr. Momini Savadogo. Oh, yes, our co-host. As Francisco said, this event is jointly hosted by the African Union Development Agency, NEPAD, whom I represent, and standing in and bringing you greetings from my CEO, from ECDPM, and from Academia 2063. We are very honored to welcome all of you to this important event. As I said, focusing on leveraging investments. For those of us who have been here the last 10 days or so, I think we've heard a lot, and we are quite pleased that the issue of food system is being given significant high-level political consideration at this COP. On the second day, the Declaration of Food System was signed by our political leaders, so this gives us something to celebrate. I do hear that we are still struggling with the language on food system in the final text of the negotiation, but we're keeping our fingers crossed that we will get some good language in there. So really, we want to acknowledge that COP28 has been a pivotal role to play. It has really spurred this inaugural leadership declaration on food systems. And this great groundbreaking declaration speaks to one of the issues that this event is trying to address, which is actually making sure that we have alignment at national level of various strategies at the national level, including, of course, having some coherence and alignment with the NDCs, the National Determined Contributions of Member States, with the national adaptation plans, with the national biodiversity strategies, as well as the national development plans of countries. Sometimes these different policies, frameworks, and strategies do not necessarily speak to one another. And so it's very important that we speak to this policy coherence at national level, but also at the global level, bringing these different global policy agendas together. This conversation and this declaration helps to do that. So we're not just having a climate change conversation here, and we have a food system conversation here, like we had the Food System Summit. You all remember we just came from Rome a couple of months back. These different global agenda, policy agendas must speak to each other so that it helps member states to focus on implementation. So it's really pleasing that at this COP, 134 countries have signed to this landmark declaration, and we are hearing about $2.5 billion US of funding that has been secured for adapting to climate change. The second point that we would just like to mention is about, looking at the different financing instruments that are there, and making a case that this different financing instrument must actually consider the issue of agriculture and food system transformation. So we want to say, as we navigate the complexity of climate change and sustainable development, sustainable agriculture, the African Union Development Agency, working with its partners like ECDPM, academia, will play a pivotal role. The AUDA-NEPAD, as you all know, was in the forefront in designing the African Comprehensive Agricultural Development Program, CAADP, and have actually led and support the implementation by member states of CAADP. We are now in the process of doing the post-Malabo agenda, and of course, harnessing climate finance for resilience is integral to this commitment and should be central to this commitment. We had a side event on the 4th that looked at the issue of carbon markets. And I'm saying we need to explore all the different instruments that can support, building resilient food systems in the continent. And we launched a publication on carbon markets in Africa, which was very well received, and highlight that because it highlighted the areas that need strengthening in our countries, including, of course, developing enabling environment, supporting capacity building, and having credible systems to monitor and verify carbon credits, and of course making sure that these carbon credits and the resources coming from them do reach the smallholder farmers. So part of this launch was really reflecting on designing an African gold standard that will be used to support the development of the carbon markets in the continent. The fourth point I just want to make is really emphasizing on the issue of partnerships at all levels. If we are going to be talking about leveraging investments for food systems and strengthening our national systems and coordinated climate plans, we need to have strong partnership at all levels. Partnership at the global level, as we spoke earlier with this announcement here at COP28, but more critically with the stakeholders at the country level, with the farmers themselves, interministerial coordination, given that this is not an agenda for one ministry, it's an agenda for the Ministry of Agriculture, Ministry of Environment, Ministries of Planning, Ministry of Finance. There is a necessity to ensure we have partnerships and coordination at these different levels. Of course, partnership together with our friends that we are working to see how collectively we can support member states in transforming our national food systems. The fourth point I would like to talk about is just building institutional and systemic capacity. We do think this is really important. We need to be able to provide an overarching space and tools to stimulate and facilitate informed dialogue between different actors. We need to strengthen the capacities of member states to be able to design policy frameworks that create the incentives for investments to happen at the country level. The capacity to influence dialogues at both national and global levels. We know that there are global processes that are coming up, including the G7. We want to ensure that the discussions coming from COP28, particularly on African issues and African interest, are carried forward into these other global spaces of discussion. So for instance, as they speak about the different financing instruments, we would like to see, for instance, G7 taking up the issues of spatial drawing rights as an issue and area for discussion, and see how that can help address the issues of food system in the continent. Lastly, of course, we are talking about, this session is about leveraging investment. There will be no investment if we do not have bankable programs that needs to be financed. So there is an issue of working with member states, working with communities to strengthen capacity to design programs that are ready for investments. So with those few words, I'd like again to welcome all of you to this very important and special occasion. Thank you.
Thanks a lot, Madame Esterin, for setting the stage. And I see very much with the organizers this as a continuation of the session that just took place in the plenary, where the ministers took stock of the Leaders' Declaration. 152 countries signed for the first time a Leaders' Declaration on Food and Climate. And we heard a lot of pledges as well, a lot of pledges, a lot of millions, sometimes hundreds of millions. But here, we need to talk about how to move pledges into action, and how especially to get finance to reach smallholders. It is about institutional innovations, as Esther said. It's about better knowledge and evidence to drive the investment plans. And it is about better finance, better quality of finance and finance mechanisms. In fact, we have designed today's panel also to bridge different sectors and actors, as Madame Esther said. So I will ask the panelists to come over, and it's just that we don't have enough seats to accommodate all of them, but it is one panel, all addressing the same question. What are your recommendations to get climate finance to smallholder farmers? And it is very important, and I welcome Ambassador Gatti that the G7, for example, offer their view on, if Ambassador Gatti representing the G7 presidency upcoming from the government of Italy, will be explaining their vision. We have Madame Pieternel Bogard, who is one of those through a public development bank in the Netherlands, FMO, who does already finance food systems with public resources and public-private cooperation. And we have Stephen Muchiri, crucially here, Eastern African Farmers Federation, because we're talking about farmers. And then we have an important other panelist. What Madame Esterin was also stressing is that it's a continual evolution. So, for example, we have in our panel, you have seen the concept note, a negotiator, the chief negotiator, one of the chief negotiator who is still in the negotiating room. So we are not really sure what time is it going to come. But I can see now the chairs have been added, so please welcome the chief economist of FAO, Maximo Torero, who, amongst other things, leads the provision of evidence, as I said, to inform investment plans, as well as Madame Reshma Shah, providing financing for smallholder farmers from a private perspective, Equity Bank, a group from Kenya. as well as last at this stage, because we're still waiting for two negotiators coming, but Richard Patton, representing the presidency of the Emirates from the Ministry of Climate and Environment, and is the lead advisor, in fact, to Minister Al-Mahiri, who is behind a lot of what we have seen happening today. So fantastic panel. We have a couple of more negotiators coming in as we go along. But Ambassador Gatti, first of all, because Ambassador Gatti, in fact, needs to then go to discuss similar issues with African ministers about collaborative cooperation on food and finance and climate. So please, Ambassador Gatti, how do you see 2024 from the G7 perspective, how to make all of these important announcements real for farmers in Africa? Thank you. 5 minutes, please.
I hope less, anyway. Thank you very much. Good morning, good afternoon, more or less, to everybody, and thank you for having me here. So let me first of all say that it's a pleasure to be in the African Pavilion for an event. Let me also say that, when you look at Italian foreign policy, the first priority of Italian foreign policy is Africa, the second is Africa, the third is Africa. So, and for us, Africa means partnership with Africa, working with Africa in a partnership. Why do we say that? Because Italy, if you look at the map, is Africa. Has always been historically, and is just, the top part of Africa. We see very much ourselves in this way, and this is the way in which we work with African countries. So I can anticipate to you that during the Italian G7 presidency, once again, Africa will be a priority, and for us, we absolutely abide by the rule that nothing about Africa without Africa. So we will be inviting, our African partners and the African Union to join us in the working groups that will be preparing the summit declaration and all the deliverables that come from the G7 process. The other thing which we are committed is to try to play a role as Italy in helping all these multilateral processes to come together. I know that it's not easy. Each of us has its own multilateral process. The Emiratis have the COP28 and really compliments to them how they have been managing. And then we have the G7, the G20. We are speaking with the Brazilian. We have the next COP. We have the United Nations processes. So there are all these processes going on. Italy intends to play a part. You will see that every time that food comes out, Italy is there. Why is that? Because we are obviously one of the most biodiverse, influential, and important food cultures in the world, and we think that it comes natural that we play this role and we enter in partnership with all our key partners, one of which being obviously FAO. I see Maximo here, and the UN food-based agencies that we host in Italy. That is very important. So we have to work, and we intend to play our role to put all this together. We think that this is extremely important that we had this event today. Somebody in the event this morning said, I think the Brazilian minister, is the good part comes at the end. Very good, in the sense that we need to acknowledge, and as NEPAD representative said, food systems and climate change are closely interconnected. We do hope that there is language at the end that states this, because if it is not, it will be a little bit strange, but it's important that we have the events and we really get things moving in terms of collaboration. This morning, a technical collaboration that really will work on how we put together, climate change and food system transformation has been announced. Italy has committed financially, but we are committing to work on this, and we will take it forward during the G7 presidency. So we'll be one of the components of the deliverables, and we will work during the next months to see how better this works. Let me say also in terms of Italy, because we're speaking about financing, we had a very interesting meeting with the NEPA colleagues yesterday. Italy is a country that has committed a very important fund on climate. So we have a climate fund that has 3.7 billion euros of financing for 4 years that is available. Actually, our Prime Minister indicated that 75% of the resources of this fund have to go to projects in Africa. So I am throwing a challenge to the African friends we have to elaborate these projects and present them to this fund. But what is also important, we have this instrument and we want to coordinate it with the other instruments, being all the World Bank resources, the other donors. So I think that what comes from the leadership declaration that Italy has not only supported but helped in developing, and we are extremely thankful for the COP28 presidency of having invited us to join them in this exercise, is that we have to work together. So partnership is the word. We have to make sure that all the different finances avenues that are there work in a coordinated manner, and we are ready to do that. We are already discussing with the World Bank how we can co-finance projects together with them, and definitely we need to work with our African colleagues to develop these projects. So, we recognize, the call from Africa about resources being made, but I would also comment that the other call that we have to do is we have to make resources work. So some resources are there, probably they're not enough, definitely, but now we have, when you call for additional resources, you must demonstrate that the resources are there, are used effectively. That really, I think everybody agrees on that, and that is where, the core of the work that we want to do also during our G7 presidency. So the message for us is that we are taking forward the work that has appeared and come out today with the push and the leadership of the COP28 presidency towards not only, obviously, our G7 presidency next year, but the next COP and all the next exercises. And I thank all the partners here in the room for the work that we will be doing together on this. Thank you very much. I hope it was less than 5 minutes.
Perfect. Thanks so much, Ambassador Gatti. In fact, I'll be a bit of a strict moderator because we have a fantastic audience here as well, and some of the people in the audience could have well as been panelists. So we want to have half an hour. This is a luxury, a COP. Half an hour of real discussion and not just the long panel full stop. So the panelists, I'll ask you to speak 5 minutes, but you can come back and forth, of course, in interaction with the audience. Ambassador Gatti needs to speak to the minister, so feel free to leave whenever you need to speak exactly about how to collaborate with Africa moving forward. It's important that I also say that this is definitely not a talk shop. We are here to talk implementation and hopefully building partnerships. So, get business cards, WhatsApp numbers, and this is an opportunity to start building partnership. We're not just for the sake of visibility at a nice event like a COP. So let's keep talking even after this half an hour. I would like to give now the floor to Steve Muchiri, who represents the Eastern African Farmers Federation. Steve, you have been in the business of connecting farmers and international processes for a while. Italy has just said they have only Italy 1 billion a year to spend resources on food and climate. We hear the COP presidency also multi-million announcements and many others. But why is it that these resources do not reach smallholders? And please give us your recommendations on what we can do in order for the finance mechanism to be co-owned directly by you, the farmers' representatives and on the ground. Thank you, Steve.
Yes, thank you. Yes, thank you. So my name is Stephen, and I'm here representing my colleagues from the Pan-African Farmers Organization that has more than 80 million smallholder farmers who are actually members of the association. I think as a representative of the farmers, I first appreciate the work that is actually being done on behalf of the farmer. That everybody is so concerned that they need to improve the welfare of the farmer, they need to build their capacity, they need to see and ensure that they're in a better place tomorrow. I think the challenge that we find as farm organizations is that all those resources that are actually put together for us do not actually reach us. I think the data shows that of all the climate finance that has actually been released, only about 0.3% of it actually reaches farmers. And I think the challenge we actually have is that there are a lot of intermediaries, a lot of people who are in between the source of the resources and the final recipient, who for some reason or other take away those resources. And this is the thing. When you look at the main funding pathways for climate finance, the challenge you have is that the architecture for funding is very complicated. You can only access these resources through what you call accredited agencies. Now, these accredited agencies are most times banks. And all of these banks have a very small portfolio for agriculture, less than 5%. So they're not even already agriculture friendly. Now, that said, when you get down now to the national level, like for example, I come from Kenya, we only have 3 institutions that are accredited. There's a commercial bank, there's a government institution, and there's a private company. So it means that if we all want climate finance, already there's a challenge in terms of the architecture of it, and number 2, the institutions that can actually assist you access those resources, because they receive resources on your behalf, but they also put in a bit of resource to whoever who is a beneficiary. So already there's a constriction in as far as accessing these resources are actually concerned. That's number 1. Number 2, when you look at other funding mechanisms, a lot of them go through, if you're not through that kind of system, then it's through the other banks. Now the other banks, as you know in Africa, like where I come from, just yesterday, or the day before yesterday, the interest rates went up. So the cost of borrowing is actually very high. And all of these banks do not have a very good history lending to farmer associations, or farmers for that matter. I think what we're actually recommending is that we have institutions. Where I come from, we have development banks, we have agriculture banks that probably need technical assistance to be able to qualify, to be accredited, to be able to handle some of these resources. Now, these banks are more friendly to farmers. You know, they lend to farmers, they're competitive rates, and I think they have had a history of lending to farmers. That's number 1. Number 2, the challenge we have also on climate finance is an issue of oversight. When you go to the national level, a lot of the national climate action committees that are looking at the NDCs, looking at all these plans, most of them are devoid of representation by farm organizations. So it's very difficult to connect these nexus of climate and food system, because already you're not in that arrangement. Yeah? So there's an oversight issue. We can't present our priorities. We cannot participate in evaluation. We cannot participate in querying. We cannot participate in fund allocation. That for me is already, again, is a challenge. The other thing that we actually have is that a lot of these resources are not huge, okay? We come for meetings like this, and sometimes you may think that a lot is actually happening in the continent, when actually a lot of these successes are very small, they're not sustainable, and they actually need scale. So in essence, we actually need a lot of resources. You know, we need to actually have resources at scale so that we can actually see impact, and we can actually have results we can actually be able to report on. And the last thing is that since this process of funding climate has been happening for long, and we actually haven't seen any results, we probably need to look at a mechanism that funds farmers directly. You know, are we able to have resources that reach the farmers directly? If they have to go through the usual pathways, can there be affirmative action to at least have 30% of those resources allocated directly to farmers? Because we are the ones who are the custodians of the food systems. If you're not receiving resources, tomorrow we'll still be reporting the same thing. Like we reported last year, we're reporting this year, and we're going to report the same next year. So I think we need to have a complete shift. We cannot do the same thing all the time and expect something different. I think the actor that is actually missing in this equation is the farmer, is the farmer association. I think as associations, we have worked very hard to try and organize ourselves all the way to the continental level. And I think we have professionalized our institutions. We need to be given that opportunity to be able to engage with these sources of funds, even if it means the same capacity that is actually, the same resources that are actually put aside to build those recipient institutions' capacity. The same can actually be done to ourselves. That tier, that technical assistance can actually be done to our associations. We have examples of cooperatives that are actually doing amazing work that we can actually be able to finance and support and scale up. Thank you.
Thank you so much, Steve. I know some financiers will say that agriculture, especially when it's small agriculture, sometimes informal, is also a risky business. And they use that, in my opinion, a bit of an excuse. We come back to that, but I would like to know from the experience of a public development bank, in the Netherlands, how do you reach smallholders? And is it also about looking at risk and the fact that sometimes risk is overstated, or maybe we're not taking into account the impact? As Stephen has just said, if you invest in smallholder farmers, you are investing in maintaining the land, in maintaining agrobiodiversity, in adapting to climate. So maybe we should also a bit rebalance impact assessment and the risk assessment. But how do you do that at FMO Netherlands?
Yeah. Well, thank you, Francesco. We are actually struggling to reach the smallholders directly, because we're not a retail bank. DFIs are not a retail bank. We're set up to finance companies. But we still want to reach smallholder farms and rural areas, and also develop especially primary agriculture in Africa, so that the continent becomes less dependent on imports. That's what we want to achieve, but the how is a challenge. So we try it via various ways. The local banks were mentioned. Historically, banks all over the world are not keen to invest agricultural sector, even before we were aware of climate change. So now we have added climate change on the risk scale. So there's not a lot of incentives for local banks at the moment to finance agriculture, let alone smallholders, which is complicated because there's a lot of them, and how do you judge each and every one of them individually? So what we are doing is providing some local banks in certain countries with guarantees, and that's helped by the EU actually, it's called the Nazira program, to de-risk and incentivize local banks to take smallholders and medium-sized companies and finance them, and we de-risk that. That's one way. Another way is to request the larger companies that are buying from smallholders to either include them, to also educate them to produce so that they can process the goods that are sold to these companies. So to take responsibility basically for the supply chain that includes smallholders. That's another way to do it. Then there's microcredit organizations, but usually they're not fit for purpose for farmers because they're too expensive, they have a very high rate, and farmers need longer term financing. So that's not always a solution. But we also try via cooperatives. In short, we're trying to find scale in terms of smallholders, either through associations or cooperatives or local banks, so that we can provide the funds and make sure that it arrives with the smallholders. That's how we try to do it. Maybe something else to mention, what is very helpful in this case is that we have NGOs who are on the ground that can help us not only make sure that the money arrives with the smallholders, but also help smallholders with technical assistance, with learning how to farm and how they can increase their yields or set up their business better. So that's what we try to do. Is it enough? No. But we're only one of the DFIs. There's lots more of them. Unfortunately, also DFIs are not very keen on agriculture. There's only 3 large ones that are really into it. It's IFC, EBRD, and ourselves. So it would be helpful if DFIs would focus more on the agricultural sector as well.
Thanks a lot, Peter Nel. I think Steve will have something to say, so we'll get back to the farmers' organization. We heard already examples of institutional innovation and then financial innovation as key to get resources to flow to smallholders. But we also heard during this COP that evidence is very crucial. How do we give the information in order for financial institutions to assess the risk? How do you actually integrate the investment plans that were set some years ago on agriculture with the fact that they now need to integrate with the climate plans, as said by the Leaders' Declaration on day 2 here of the COP? So Maximo Torero is one of those who can offer the evidence and the framework for the climate and the food security objectives to be together. Maximo, how do you plan to support this work forward? In particular, how can you use information for the sake of investment? Maximo, please.
This works? Yep. Okay, great. So we just launched a few minutes ago the roadmap to SDG 2 and the 1.5 degrees threshold. And that's extremely important because it brings two elements which I think are central for Africa. It brings the element of urgency. The African continent has been struggling with hunger in the last years. And in all regions of Africa, hunger has increased in the last 3 years. At the same time, they are facing significant challenges on natural resources and issues that climate will affect them because, of course, we will expect that the frequencies of shocks coming from climate will be increasing substantially. So we need to find a way to change the vision of how we attract investment to agriculture and to the agri-food systems. And what we are trying to bring in the roadmap is trying to explain that the agri-food system has a role, which is the right to food. And in Africa, this is, as in all countries in the world, this is central. The right to food is the priority, access to healthy diets. But at the same time, although it has a responsibility in terms of climate, it has a huge opportunity to increase efficiencies, huge space. There are many ways in which we can increase efficiencies in how we produce in many of the countries of Africa, and also we can produce more with less. And that is what will help at the same time to reduce the climate issues, the externalities that we create, but will also help to improve the hunger and the lack of access to healthy diets. Now, how you do the part of investment? So essentially what you are looking here is to increase climate financing to agriculture. Today, climate financing is only 4%, and significantly less in Africa. So we need to attract climate financing to the agri-food systems because it's where we can make a bigger change. The two sectors that have to change are energy and agri-food systems. And clearly in agri-food systems, we have a lot of space to improve. So the job and what the roadmap wants to work in this 3-year period is to try to work with the countries, work with the OCARA framework, work with the farmers, small, medium, and large, because you have to bring all together to try to identify which are the different types of projects that can comply with this goal. And there are 3 types of activities or projects that we need to do. One are the bankable projects. Those are the ones that the banks will fund. Okay? And there are many options of bankable projects in sub-Saharan Africa, in Africa as a whole. And those we can help with technical assistance, bringing in the investment center of FAO to try to build these things. And that's what exactly we are doing in the Hand in Hand initiative, where we have more than 40 countries in Africa right now. But we are bringing the layer of how we can produce more with less. The second one, which will happen, are non-bankable projects, are projects which are difficult to finance by the financial institutions. Why? Because they are too risky. They are in countries which are facing conflict. They are in countries that today don't offer the environment and the economic environment that a bank will be able to do it. And in those countries, we need to be very specific. Like, for example, South Sudan. South Sudan has a huge potential for rice. We are working now in scaling up a pilot of rice using the latest variety of weather-resistant rice and using efficient use of fertilizers so that we reduce the impact of our use of chemical fertilizers. But there is a lot of risk. Therefore, we need to find a ways to risk that. And that's where the IFIs, international financial organizations, and also the foundations can support this type of activities until the environment complies. So we will have bankable and non-bankable. And then we have the third bucket, which is important, which is the bucket of social protection. But how we can bring social protection to incorporate and to help to minimize those risks so that people that are being affected because they cannot get this in financing, smallholders which are subsistence smallholders, can also get this support that will allow them not to be falling into a significant poverty trap. Now, how we create the inclusion, the inclusion of smallholders in the bankable projects. And there, I think, in the bankable projects and in the non-bankable projects, I think we need to find ways in which we can associate smallholder producers. We have to create some horizontal coordination. And there have been several models that we can work that will help them to accelerate this process. Why? Because you want to pool the risk. You want for a bank to be able to come and to be able to have more farmers over which to work so that you have enough aggregation, enough scale to be able to produce more efficiently, but also to be able to combine and minimize the risk that the bank will be paying for it. And that includes horizontal and vertical, like contract farming arrangements, where with very clear rules, where you have common power between the producer and the corporation or the aggregator, but also horizontal arrangements, which have been happening in many places in Africa now, and has been happening in Asia very successfully, where we can associate farmers so that they can work together and minimize any potential problem of economies of scale. That will allow them to have access to certain technologies that are not scale neutral, and will allow them also to aggregate both in the selling and also in the cost of keeping standards, for example, and also in the cost of being able to reach markets with higher standards. Those become bankable. And finally, on the financial institutions world, we normally talk about de-risking, no? But nobody knows exactly what is the level of de-risking. We just say we need to de-risk this thing for the private sector to come. But also we need to increase the data and the information and the scoring system that the banking system have in place to score these farmers, these associations. And today, the banking system are using tools with some exceptions that are not necessarily appropriate to a sector that has so many risks and seasonalities. So we need to find a way to work with the banks to change that level of risk scoring, because the evidence shows that the smallholders pay. And they are good clients, but banks are afraid because they don't know their business, and therefore they are far from it. So we need to innovate on the scoring system so that we can attract this. The goal of the roadmap at the end of the line is to have a warehouse of all these bankable and non-bankable projects and other types of projects so that we can attract investment, private sector, public, IFIs, to be able to accelerate this process.
Thanks so much. I think a lot of people taking notes on the new upcoming work of FAO to keep together very important objectives, sometimes conflicting, to give new indicators, scoring systems. Thanks for these very important points. I'm sure, again, Steve would have something to say about all of this. So once we get to the question stage, I'm sure Eastern African Farmers and Pan-Africa Farmers Organization will come back to us. Let me give now the floor to the presidency of COP while congratulating them again on the path-breaking result. If Steve, you can pass on the mic. Steve, sorry, Steve. Thank you very much. While congratulating the COP presidency for the achievement of having leader statements and food and agriculture at the center of the COP, how do you see now moving forward these announcements of collaborative, having heard some of the needs of the investors and the farmers? What do we do together? Please, your recommendation how to be practical. Thank you.
Thank you very much. I wish I could take the credit for it, but I think that's down to Her Excellency Mariam Al-Maheri. Isn't it great to be discussing food on a food day at COP? It's the first time, and I hope it continues. Obviously, we're here to talk about finance, so I'm going to limit my comments to that. There have been a lot of announcements here at COP. Has anyone picked up on financing the future of food? No. And that's because I think on the panel where it was discussed, there were 6 other announcements. So this is something we've been championing at the ministry for the last year, whereby we've been looking at, since COP27, the issues that we faced, right? We heard from project owners that they couldn't gain access to financing because they weren't bankable. Although bankability is a funny one because it varies from region to region and country to country. We heard from companies or DFIs, we have money, but we don't have the projects. Right? Again, because they weren't bankable, they weren't financeable in scale. We heard from sovereigns, they couldn't borrow more money, particularly in those countries that were suffering more from the effects of climate change. So we set about trying to fix it. And we started to look at various techniques that you could put in place to provide a degree of risk premium, to provide a degree of risk coverage to individual projects, but that did it in such a way that you're effectively giving the projects equity through a debt instrument, because you can't go to small farm holders and ask them to take on debt. Right? That's just a very risky way of doing it from a bank's perspective. Right? What's the collateral? How are you going to look at that? So we thought, how can you start using debt instruments to inject equity into small farm holders and into bigger programs? And how do you do it using private sector money with the help of DFIs? So we came up with this new innovative bond structure that effectively provides a collateral pool on a fairly low basis, low coupon basis, to allow a second bond to be issued that provides the equity as a debt instrument into smallholder farmers or into projects in Africa. Now, obviously, part of this means that you need data, you need a lot of aggregation, but we've now found several partners to do that with. And we hope to be able to launch this in full in the next 3 to 5 months. To really make sure that we're delivering on our promises, which was to invent something new, to deliver it to the people that need it. So we're working, really hard now to try and launch it as a natural product. It's been designed. The World Bank are going to support the first issuances because they are innovatively thinking with us, or World Bank Treasury, I should say. They've been working with us to really try and put this on the ground and make it happen. Because it's not a It's a new product, right? And the problem with new products, particularly when you take them to bankers, they go, oh, where does that fit? It doesn't fit on my debt capital markets desk. It doesn't fit on my equities desk, because it's a debt capital market project with an equity kicker. Yeah, so it's a really kind of innovative new thing, but when you're doing innovative in finance, the financiers don't like it because the risk committees say no. And that was another thing that we found when we were looking at DFIs, and they were operating obviously in countries that had high levels of sovereign debt or difficult political environments, but they wanted a AAA or an investment grade rated project. So they'd spend a year or two making an individual project investment grade, right, at large scale. What this structure does is it gives them a way to buy a bond that's investment rated from day one, right, which then allows the money to flow into the projects that need it. With a portion of those projects sharing the profits, if the profits get made, back to the bondholders. So you get effectively principal protection coverage whilst getting the potential to earn more than you would do on a risk-free rate through this structure. So I'm happy to talk more to anyone that wants it, but I'm hoping that these sorts of little innovations that we make as time goes on actually make a big difference, and we can get the money to where it's needed most.
Fantastic. Thanks so much to Richard Payton again from the presidency. And last but absolutely not least, Misha from Equity Group, one of the biggest banks in Africa. We have heard a lot of references to private investments and commercial banks. So what is your take? How do you look at risk and impact assessment? How do you intend to come as partners to this enabling environment where climate finance can actually be used for smallholders that are the majority, of course, of the people in that part of Africa? Thank you.
Thanks, Francesca, and I hope you can all hear me. Equity Bank operates in East and Central Africa. Our agriculture portfolio at the moment is about 14% of our loan portfolio, and there's a target to grow that to 30%. And it's the Africa Recovery and Resilience Plan is the strategy being rolled out by Equity, and a core pillar of that, pillar one, is actually agriculture. So everything I'm going to say next is based on the fact that we are actively going out there to seek and grow our agricultural book. And the reason for that is because we fundamentally see that there is an element here around food security, but more than an element on food security, if we want to change lives and livelihood in Africa, we've got to start with the agricultural sector. We've got to move it out of the informal into the formal sector. A big part of the way we deliver this is through what we call a twin engine model. We have a foundation that goes in and provides capacity building. We find that especially when we're talking climate finance, a big part of, especially when we're talking to smallholder farmers, they don't understand what they need to do from an adaptation perspective or how to build resilience. So a big part of what the foundation does, and we have about 300 agronomists in Kenya, and they are based in our branches where they are high agricultural focus, is for them to help smallholder farmers understand what is, for example, regenerative farming. So that when they understand that, then we can tag them into how we can finance it. We have been working with aggregators and off-takers, and I know there are some that don't have the best reputation, and I can see Steve smiling there, and we're not working with that one, by the way. So we do work with them because of the fact that when you talk about smallholder farmers, the number of smallholder farmers are very big. But if we can work through the aggregators, what we are able to do, and especially off-takers, is work through them to build the capacity. So I have sat in sessions with smallholder farmers where they've been given financial literacy training, how they can actually provide documentation, because then only can a bank come in and provide financing when they have all of that. In addition to that, we've been looking at what is the other aspects we can work on. Can we actually joint venture or bring in companies that it can increase better yields, better seeds? What about machinery that's required, mechanization? Can we bring in companies like we've been working with John Deere around setting up a leasing structure in Kenya where we can actually lease some of these rather than buy? Are there service companies that can support with some of this? So we were actually looking at the whole ecosystem to try and break where some of these aspects are. But in addition to that, what we're finding is that if we want to de-risk, capacity building is only one element of it. We've already talked about like guarantees, so first loss guarantees. Insurance is another big aspect that we need to look at. Data is another big one. So we are moving towards a risk-based pricing, but for that, we need data to actually cover that. And some of the things that we, just to show that this is moving forward, on the 2nd of December here, we actually launched a program called ACROFIM with IFAD, and that is a program for smallholder farmers and climate adaptation in particular in Kenya, Uganda, Rwanda, and Tanzania. And that's focused purely on trying to reach out on the last mile. So those are some of the things that we have been working on in terms of really trying to drive the book from the 14% that we currently have to the 30%. The last thing I'd probably add is also, and which is unique to smallholder farmers, a lot of the times when you talk about farming or financing, and this is where the microfinance probably comes in, the term required is very small. People just need it to the next sale, the next cycle, so 6 to 12 months. And that's something that we're looking at as part of these like ACROFIM, where we can have rolling funds, where we can provide loans of less than a year just to take it through to the next kind of production cycle.
Thanks so much. Thanks so much, Misha. I would have a lot of questions myself. I think if these people here sitting would take Kenya as an example, work better together with the financial instrument Richard presented, some of the resources of FMO, the guidance of the farmers themselves, the information and the policy guidance of FAO, and the contribution of a bank, you would just move in itself the conversation of food system transformation financing forward. So it's a great panel. Thanks so much for all your points. But here is your time, please, to question them, ask questions. Some of the issues are very technical. I can see already Professor Brown. Maybe some of you know Professor Brown. He has been doing food systems work for years. From your experience, please enlighten us or ask a question, whatever you feel like.
Thank you. Thank you, panelists. You have laid out a complex and very convincing agenda. I'll underline it is complex. The diversity of food systems in Africa is known to all of you. Let me emphasize and make the point as a question. There is an essential investment which typically is not bankable. That's the investment in science. The answer to a complex agenda is investment in science. But most African countries invest 0.1 to 0.2% of agriculture GDP in science. There is no way to achieve the bankability, the priority setting, the knowledge, the linkages between farmers and investors and government. So don't we need to rethink the African agriculture science system, country by country, regionally and continental, with the universities, with the national agriculture research systems and the academies of science? So a challenge. I agree with all bankability, and I really love the 10-point agenda of FAO. That's a breakthrough. But where is the science agenda on the panel?
Thank you very much. Let's take three, and before getting back to the panel, this gentleman, yes, please, introduce yourself, because I don't know you, sorry, I knew Professor Brown, but...
Thank you. My name is Patrick Karani from Kenya with the African Union, the Interbureau for Animal Resources, AUDA-NEPAD. It's interesting from what we've heard from the panel, and I know what we've heard from Equity and the small scale. Sorry, it's lunchtime, eh? Okay, Patrick Karani from Kenya, AUDA-NEPAD. Great insights from the panel and the case for Kenya and Equity, among others. Now, fundamentally is that with the small-scale farmers, we are concerned the issues of production and productivity. And then from the financing side, of course, you're looking at return on investments, okay? Whereby the challenges we've known like for many years is accessibility of these funds, could be knowledge or could be just an awareness. And then of course the cost is also very high, they cannot afford it. But fundamentally, if we don't integrate the issues of conservation, because conservation of the surrounding environment for farmers will contribute to their productivity and production. And that is nowhere within the discussions. And maybe from the small-scale associations, I don't know what kind of issues you are addressing to help them with the capacity building so that they can enhance their production and productivity before they prepare, bankable projects. Thank you.
Thank you very much. Any other point? Yes, please.
Hi, I'm Rushang from Luxembourg. I used to be previously a banker, and I quit my job 7 years ago, and I have moved to Africa, Ghana. I do farming. I first started with smallholder farmers. Extremely difficult to manage everything together. People like listening to that you should work with smallholder farmers, but working is a challenge in itself. What I want to highlight, my concern is I come from the finance world. I understand exactly what is needed to make a investment, but what is really missing, and I have not heard in last 10 days people speaking about, that there are people ready to give 200,000 euro grant, and there are people ready to give $20 million to do something. There is a huge gap for someone who wants $2 million to $5 million ticket size. And people keep on saying that, okay, the cost of capital is high, this, that, but the risks are there. There are 1 billion hungry people. Someone has to take that risk. Either the government, either taxpayers, someone has to take it. I have seen on the ground, things are not materializing. 7 years is a long time. I've been listening to this and unfortunately, I know someone like me who knows all the impact funds in Luxembourg. If I can't access it, God help the farmers. Let me put it like that. Thank you very much. And I would want to really understand what are the measures to, because 200,000 euro grant, even if you hire 2 people, your money is gone, even without starting to do something. So where is that difficult Death Valley spot of $2 to $5 million investment? Where we can get it. I have gone through places, they give you paperwork which will take you 5 years to fill that, and it's not solving the problem. So this is the ground reality question, and I hope I have a direct answer to this.
Thank you. So let me get back to the panelists. I would imagine this question would be interesting to be posed directly to the public and the private investor here, Peter Nell and Misha. But first of all, I'd like to give the floor to Steve Muchiri, because if you can pass on the mic, thank you very much, Richard. About aggregation, about some of the things you heard, is it enough? Often is the question, and your expression seemed to say, no, that's not enough. So please, Steve, give us your reaction also to the questions from the panel if you can. But on the science agenda, I would imagine also Maximo Torero wants to come in.
Yes, thank you. I think when it comes to funding farmers, it has to be intentional. It really has to be intentional. And it's unfortunate when you sit with financial institutions and they say that their portfolio in agriculture is this much. When you unpack that portfolio, it's aggregators. It is guys in logistics. It's never the farmers. Yeah? It's always other guys other than the farmers. We have to be intentional. And I think, like I was saying earlier, farmers have built cooperatives. I mean, Robobank is an example of a farmer cooperative. It's an international bank. And these cooperatives are actually borrowing from these same banks. So I think this issue of saying that there's no credit history, I think for me, either it's a capacity issue within the bank, because we've worked with these banks, and we know. We went to Equity in Uganda, pushed for an innovative product. By the time the season was starting, the product was not there. We raised the issue with the headquarters, nothing. We couldn't even lend that season. So I think for me, it has to be intentional. Number two, there's a question about what farmers are doing. There's a study that has been released by IIED, and it says that they have assessed 13 countries in the ACP countries, and they saw that farmers have invested a total of 369 billion US on climate adaptation. That fits in your conservation question. So farmers are actually doing something. Though they're not just sitting pretty and waiting to be counted. They're actually doing something, and you can actually see the level of investment. So my thing is, when it comes to funding farmers, we have to be intentional. I know we've talked about risk assessment, and I think it's something we've raised it before with financial institutions. I cannot be assessed the same way as she is assessed, or a manufacturer is assessed. And I think that's why we talk about other institutions that are farmer-friendly, because they have their own way of assessing. They have other instruments that they actually use. I took my members through one of the banks, and there's a requirement of almost 25, 26 items that they need to fill in on a checklist, which they can't really fill. Yeah? So we have to really think through about other ways of assessing the farmer. In Kenya, for example, we have, I don't give the name of this mobile platform. They put in money, no collateral, no nothing, and they've been lending to farmers. The first season, only 40% paid. They lend the second season, the 40% paid, and the ones who hadn't paid, the 60%, 20% paid. By the time there were 5 seasons, they had already collected almost 70% of the money that actually issued to farmers, which goes to say that, I think someone said, farmers actually do pay. So you can actually see someone risked their money, they put it out to farmers, that e-platform is still running now, they're actually getting more money, and they're actually able to they've actually built a credit history, algorithms on a digital platform. So I think there are many examples, and we're not saying that the banks should come and reinvent the wheel. Those examples actually are out there. If they want to know where they are, they can actually approach us. Those examples actually exist, and they actually work with farmers. And we're actually saying, let's look at how that technical assistance, instead of giving it to NGOs that you said you're working with, can we work with the cooperatives? They're closer to the farmer. The NGO will leave tomorrow, okay? The cooperative will remain. It's actually owned by the farmer. So I think, for me, it's really, we have to be intentional. We can have this discussion all the time, but we'll never conclude unless people are intentional. Thank you.
Thanks so much. Maximo Torero, the science agenda, and then we get to the investors on answering the question, who can actually take the risk? But Maximo Torero, if you want to answer also the question, we need someone to take more risk, full stop, otherwise it will never reach the ground, feel free, but certainly the science agenda and any other consideration. Maximo, please.
No, okay. Joaquim did an extremely important question. That's why I also was referring to non-bankable projects, which is exactly what you're saying. And this is how we can accelerate science in these countries, and that is needed. But the problem is that you have to create critical mass for the science to flourish. And you have to link their science with the science in the world so that they are state of the art. So I think that's a public good. That's a global public good. That's where we can really invest in human beings, in creating human capital. With Usman Badian of Academia, we did this AgroDep initiative, which tried exactly to do that. We were trying to create human capital with access to data and state-of-the-art models. That's one type of science. But in terms of breeders and the crop science, we need to improve. There is a huge effort going on in Africa right now, like 250 breeders, state-of-the-art, through the Association of Breeders, I don't know the exact name. Those are the things that we need to empower. Because today we are thinking a lot of funding global institutions, but we're not understanding that we need to fund local people that are already being trained and are in the frontier. If I fund an international organization like FAO, whatever, a lot of the money will disappear in overheads, and very little will arrive to these people that really need the money to do a lot, because they are trained to do a lot, and they have the capacity to do a lot. And that's what we need to understand. And we need to start to refocus a little bit the public money, the public good money from the North countries that are helping South countries, that they need to start to reach directly to the universities and institutions in the country to empower them, and of course, bring the global institutions as advisors to them to help them. But the money has to go to them. That's the only way that we will move forward this science agenda. Because if not, we will get too thin. The second thing on the de-risking, that's a very complex issue. Banks are businesses. And I am not going to force a bank to take a risky project. Agriculture, by definition, is risky. You are vulnerable to the climate, you are vulnerable to many nature issues, to conflicts and so on and so forth. Lack of property rights because it's informal. So we need to find and to understand and to have the same language of the financial system so that we can try to compensate those risks. What we are trying to do in that sense is to reduce risk through reducing asymmetry of information. Basically, what we do is we work with countries and with farmers to try to bring projects in areas that we know there is potential and trying to convert those projects in projects that banks will understand. It will have the financial indicators that they will understand. Then we try to reduce the first losses by bringing entities to support that. For example, MIGA in the World Bank. There are political risks, MIGA can operate. We also try to bring insurance into the game because you need to bring insurance. In most of the countries where farmers are getting more access, they are conditioned on having an insurance. And then they can apply because then they remove that risk from the banking industry. If the weather shocks them, the insurance will trigger, they will get their money. So we need to find mechanisms. But to build an insurance system, we need to invest public money too, because we need good weather data, we need good estimations of the losses, and that is what we need. So we need to try to not only complain about the banking system, but to try to find a way in which we can create those public goods that will help farmers to reduce those risks that they are facing by the nature of their activity. Now, of course, you can have the risking by the first losses, no? And there are financial institutions that are doing that, and they are helping. But again, for me, the signal that you are getting that they are funding aggregators is telling you something. They are looking to somebody that can aggregate, have volume, and therefore they will have a market. Now, what we need to do is to find a way to coordinate farmers so that we can create that level of aggregation and strengthen associations or horizontal coordination in the agri-food systems. There are very good models in Vietnam, in many Asian countries of corporate farming with the smallholders. And that aggregation, without losing their property rights of land, creates and reduces another type of risks to banks and gives them access to many things, which before they didn't have access to. So we need to play with different models, we need to innovate to be able to create that problem, but don't assume that the banks will take more risk because of taking more risk. That won't happen.
Thank you very much, Maximo. And now to Ms. Shah and Ms. Bogart to answer the issue of risk and then some of the points that were made. And very, very, very good suggestion, of course, from Maximo Torero and also Steve already, but please.
Yeah, just to expand on what Maximo just said, you also have to understand how do banks get funded. A big part of what comes from funding is also depositors' money, the same farmers' money that are being deposited in there. And so there's a safekeeping required for that as well as shareholders. So there's one element there that we need to manage risk. But also I want to expand on something else. I think when we use the word aggregator, people think that that does not always go to the small farmers because they've probably got an example of one aggregator that hasn't worked and therefore that's tainting everything. When we talk about aggregators, it could be aggregation. And that's a key part, whether they are community-based organizations or anything like that. When you have smallholder farmers, and especially thinking about Kenya, if they don't own the land, they can't put any infrastructure on that land. So there is a requirement to aggregate for certain infrastructures, such as boreholes, such as any kind of drip irrigation, etc. But I want to just do one example. When we worked with one off-taker, and they said to us as a bank, we want to move our relationship from transactional to partnership. Can you help us work with the smallholder farmers? They had done a lot of research on the crop themselves. We then worked with them. They had over 10,000 smallholder farmers that they were buying as an off-taker, and the funding was going directly to those smallholder farmers. So when we talk about an aggregation off-takers model, those are some of the things that we're trying to do to have a much bigger reach out there to the smallholder farmers. And in terms of then like the quantum, I think the one thing that we work with, we don't have a minimum quantum per se, but we do have a maximum depending on payability of it. And that's where the first loss and all those elements really come into it.
Thank you. Ms. Bogart, anything to add to react to the question or to the rest of the point from the panel?
Just to comment, I think what Equity Bank is doing is very supported also by us. Equity Bank is actually a client of FMO because it's a very good point. It's very frustrating if you're in a country where the financial system is not functioning. and access to finance is not readily available. That's what you're running into. And then to try to solve that via an impact fund is not going to work, unfortunately. So so I'm indeed, for the time being, we're working on establishing a proper financial system so that many more people have access to finance, to proper finance. But that is not happening today, right? That takes time. In the meantime, we are, I'm Dutch, and the cooperative model is very much supported, but not every culture can handle that or accepts it or finds it an acceptable form. But uniting, making sure you unite yourselves and then become bankable, if you like. It's not a nice word, but that's the way the world looks at it. That can help for the time being. Same as the associations, by the way.
Thank you, Peter Nell. Yes, Richard.
Sorry, I just want to come back to the science question. Very good points, Your Excellency. But the science, so the CGIAR received 200 million from the UAE and the Gates Foundation during this COP. We then crowded in an additional 690 million for crop science research. The CGIAR has a network of science facilities all throughout Africa. So we're hoping that that will go some way to, helping to start the science within the African continent. It looks into salt-resistant crops, diversity of products, and I think it's very important. And when we look at the kind of the conservation part, many of the programs that we're now looking at to fund through this new mechanism actually include conservation as a core part. So they're either in grassland management areas, and we're not, for those ones in particular, we're looking at putting in the systems in place to be able to monitor and report on the development of the carbon, both on the grassland and the soil, so that the farmers benefit, but they don't pay. The carbon credits that are then taken and sequestered from the land are then shared back both with the farmers, the government, and obviously with the people financing it, because there has to be some sort of payback. But we're trying to look into that. And then finally, to your point on financing, if you can go to your investors and say that 90% of the economics of your project are covered, would they change their mind of investing? And that's what we're trying to do through this finance mechanism. So by using not catalytic capital, not first loss provisions, because I have an issue with first loss provisions. I don't think they're sustainable over the long run. I'd like the first loss for the theory of capital allocation goes, if you give someone free money, they spend it badly. You put the first loss on the project developer, they spend it slightly more wisely. So we've turned the first loss provision around slightly in our new model, just to try and, make things different. Again, trying to innovate the finance sector.
Let me see, how many questions do you still have? Any other? No, sorry, you would have to take bilaterally because we need to give the floor to another. I don't know, because I recognize certain people, for example, IFAD or SMB, who have had events during Finance Day. Do you have anything to add? Or can we move into the concluding phase? Any other question? Yes, please, very quickly, IFAD and then SMB, because I've been looking very deeply into financing smallholders. What can you add from the IFAD experience, especially the thriving East Africa?
No, thank you very much, Francesco, and thank you very much to the panelists. At least we're working directly in different ways with Maximo, with Equity Bank, and of course the East African Farmers Federation. And so I would be very happy to explore how we could work together more closely with FMO and also the new initiative, the platform that has been launched around science and innovation. I think platforms are it, and I think this is what was coming very strongly through the panelists right now. The experience of IFAD in trying to reach the last mile has really been looking at systemic investments, looking at building architecture and infrastructure to actually get and roll out those technologies. By working, for instance, working through an e-voucher, digital e-voucher, working with agro-dealers, working with banks, and Equity Bank has been a very strong partner in that. We've been able to reach at least a minimum of 3 million farmers in the context of Kenya with agricultural inputs at a reduced subsidy. So those are what we're calling smart subsidies, and building those types of ecosystems that actually reach the small-scale farmer and still gives them the choice of what types of inputs they need, what type of business relationships they want to establish with agro-dealers, who are really essentially the backbone of service delivery across Africa, not only in Kenya. So I think, these types of systems take time, but I think where markets are fragmented, this is where the investments need to go. So that's one such example in the Kenyan context. In respect to de-risking and looking at financial systems, we also have a lot of good examples where if we want to build capital markets, in the case of Uganda, we work in establishing equity funds, which can invest in 14, 15 agribusinesses and actually look at long-term SME finance there, and having these companies registered in the stock exchange builds a capital base, unlocks domestic resources, and in that instance, we also mobilize resources from George Soros Foundation. The foundations are an important source of the first loss that maybe might not be, nobody might wish to encounter that, but foundations tend to do it. Finnish Church Aid invested 10 million in that fund. And the good thing, it was seed money from the EU. And the EU doesn't necessarily have to reinvest in that system because it already has the fund that is registered and can continue to invest in other businesses that are off-takers to small-scale funds. So I think if we put on board this systems thinking, that could take us a very long way.
Thank you very much.
Thank you very much.
I can see here close to Madame Esther, there is someone who's been around a lot here at the COP. SMV, what else have you learned in the previous 10 days about finance and smallholders, please?
Well, thank you very much. My name is Harker Koster. I work for SMV, Netherlands Development Organization, and I'm a partner of FMO in the Dutch Fund for Climate and Development. I think what I've learned walking through many meetings on finance is that we are looking always from the side of how we make the bankers and the financial institutions and the donors it more attractive to invest in agriculture. But we are not always asking ourselves, how do we de-risk also the smallholder farmer? There are some costs, and I've heard about, for example, how we make projects bankable, how to originate feasible projects, how do we pass through this valley of death and reach the missing middle. And those have cost in making them move to formality, for example, a case that I think Equity Bank brought up. So my question is, okay, for you that are the innovators in finance, how do you incorporate the cost of origination, the cost of TA, into these new financial products?
Thank you. Just quick answer from Richard, and then I invite our friend, the Managing Director of Academia, to step to the podium to give his concluding remarks, because we need to wrap up a bit. Feel free to go, of course, if you have another panel. Richard, how do we integrate that element?
Yeah, so technical assistance is hugely important. It has been part of the Emirates Declaration. It's required to get business plans to the stage where at least they're a business plan. This financing mechanism can't finance it unless it has some sort of business plan, land management rights, ownership structures, the benefits with the people, some sort of carbon accounting. So it's hugely important to have that as part of it. We look to funds that are already out there, that are already doing this. They have a pipeline of projects which we then help facilitate and finance.
Thank you very much for that point. Mr. Momini Savadogo, Managing Director of Academia. Please, what's your take and some concluding remarks briefly, please, and then we can conclude the event. Thank you.
Okay. Yeah. Thank you very much, Francesco. I want to acknowledge our distinguished panelists here. I think the topic by itself is so relevant and timely, and seeing the different perspectives here tells us first, my take-home message is that everybody counts. The stakeholders along the value chain process, everybody counts. And it's very important that everybody takes his responsibility but also work in partnership and also according to the principles of subsidiarity. And we are talking about financing the system. We have good news here at the COP. Now is for us to make sure that everyone in the process get an access to the finance to play its role in a responsible manner. This is the first one. The second take-home message for me is that we need to put science and innovation at the heart, at the center of the process. And the way for science to deliver it is to be embedded into the processes where we can help connect the different dots, okay? And then also make it inclusive, meaning that from international organization perspective to continental to REX to national, how do we engage and mobilize the different institutions that have their own capacities and empower local ones, connect to the international ones, and deliver effectively according to the demand and the needs on the ground, and make it impactful. The third one is, of course, in this same pathway of how we can make more impact, because we need to develop programs that are impactful enough. And to do that, I think we can also use some of the new technologies and innovate on them. I want to mention and touch a bit on some of the digital and artificial intelligence technologies and tools that we can use to help us fill some of the gap in terms of data generation, but also helping to contextualize and make sure that we help in monitoring our impact on the ground and make it in a coordinated manner. That way, we are sure that we can track our progress together, and then we can move forward. So I wish to thank you, Francesco. Thank you very much for the good moderation, and thank you all for the insightful discussions. And as academia, of course, we avail ourselves to continue supporting with data, with analytics at continental, at the regional and national levels. We are here to support with science and data, and then also roll out some of the new digital tools we are developing to support farmers on the ground. AUDA-NEPAD, thank you so much for the good partnership, and IFAD and others, we are ready to continue partnering with you and expanding our work on the ground across the continent. Thank you very much, Francesco and ECDPM. Thank you.
Thank you very much to you and Academia AUDA-NEPAD. I just want to ask the panelists to stay for a quick picture. All of you, including the people online, sorry we don't see you, but there are people online, remain in touch. I personally, I think all of us have learned massively about institutional innovation, financial innovation, new evidence needed, so let's keep in touch, and we will continue to work together. If someone wants to have a further discussion on finance, tomorrow at the Food Systems Pavilion, 9:30 with SMV, and we continue the conversation. See you soon, and thanks again to AUDA for hosting us.